welcome back to the channel. Today, we're diving into Tesla's Q1 2025 earnings, why the stock is popping despite a big earnings miss, and my take on whether it's a solid long-term investment. All right, let's start with the earnings. On April 22nd, 2025, Tesla dropped its Q1 numbers and they were rough. Adjusted earnings per share came in at 27 cents, missing Wall Street's estimate of 39 cents by a mile. Revenue was $19 billion, down 9% from $21 billion last year. Automotive revenue tanked 20% to $14 billion, hit by a 13% drop in deliveries to 336,681 vehicles. Operating income down 66% to $400 million with a tiny 2.1% operating margin. Tesla even lost money on car sales without regulatory credits. These numbers scream struggle. Price cuts, lower volumes, and rising AI expenses are eating into profits. So why did the stock jump? Well, it's all about the earnings call and Elon Musk's vision. Investors aren't sweating the miss, they're buying the future. Musk doubled down on Tesla's AI and autonomy plans, hyping the Robotaxi launch set for Austin in June 2025 and pilot production of Optimus humanoid robots in Fremont this year. He's pushing for millions of autonomous vehicles by late 2025 and 1 million Optimus robots annually by 2029. Plus, Tesla's energy storage business crushed it, with revenue soaring 67% to $2 billion. The market's betting on Tesla morphing from a car maker into an AI and robotics powerhouse. Here's the breakdown. First, Musk's promises on Robotaxi and Optimus are catnip for growth investors like me. If Tesla pulls off unsupervised full self-driving or a legit driverless ride-hailing service, it could dominate a $1 trillion market. Second, the energy storage boom shows Tesla's diversifying. Batteries and solar are cash machines with higher margins than cars. Third, Musk signaled new affordable vehicles, like a redesigned Model Y, hitting production in early 2025. That's huge for volume growth, especially in markets like China, where Tesla's losing ground to cheaper rivals like BYD. The stock was already down 41% in 2025 before the report, so the bad news wasn't a shock. Investors saw Musk's focus and said, "We're in." Now, my take on the stock as a long-term investment. I'm bullish, but it's not a slam dunk. Let's start with why I love it. Its AI push, Robotaxi, FSD, Optimus could make it the NVIDIA of mobility. I'm all in on AI, and Tesla's got a massive lead in real-world data from millions of cars. The energy business is a hidden gem, growing faster than autos and padding margins. For me, Harvest Tesla Enhanced High Income Shares ETF is my favorite way to play Tesla. Harvest's 25% leverage and covered calls give me 12 to 20% annualized yields, while I ride 75 to 95% of Tesla's upside. But there are risks, and I'm not blind to them. The stock is volatile, down 50% from its December 2024 peak of $479, losing $800 billion in market cap. Competition's brutal, especially in China, where BYD's cheaper EVs are stealing share. Price cuts are killing margins down to the mid-teens from 20% last quarter. Musk's distractions, like his Trump White House role, sparked protests and boycotts, and tariffs on Chinese and Mexican suppliers could jack up costs. The Robotaxi and Optimus timelines, Musk's notorious for missing deadlines. Morningstar calls Tesla overvalued, trading 60% above their fair value estimate with a high PE ratio compared to Toyota or BYD. If autonomy flops or EV demand tanks, Tesla could slide further. So is Tesla a buy for the long term? For me, yes, but with a strategy. Its growth potential in AI, EVs, and energy is unmatched, and I'm betting on Musk to deliver at least half of what he's promising. The stock's dip makes it a better entry point than at its $1.5 trillion peak. My plan's simple. Buy TSLY on dips like I did in January to stack yields and capture most of Tesla's upside. I balance the risk with defensive stocks like Costco and Microsoft in my portfolio, keeping my exposure to volatile names like Tesla in check. If you're holding for 5 to 10 years and can stomach the swings, Tesla is a growth beast. But if you're risk averse, wait for a bigger pullback or stick to safer bets. Thanks for watching. If you like this, hit the like button, subscribe, and check out my Wealthsimple affiliate link in the description to trade TSLY or any other stocks or ETF commission-free. Talk to a financial advisor to make sure any financial decision fits your goals. See you next time.